The UK economy flatlined in Q4 2019, recording an output growth of 0% compared to the previous 3-month period. As expected, political uncertainty can be attributed to this stall in the economy. Yet the services and construction sectors both contributed positively to output growth in Q4 2019, growing by 0.1% and 0.5% respectively. Meanwhile, manufacturing output contributed negatively to growth, falling by 0.8%. The UK construction PMI rose from 44.4 to 48.4 in January 2020. Although still contracting, January's readings signal the slowest pace of contraction since May 2019. Softer declines in new business and improved business optimism were the standout positives from the survey. Although all areas of construction experienced declines in activity due to a lack of opportunities to replace completed contracts, survey respondents commented on signs of a turnaround in demand conditions.
In London specifically, ONS data revealed that the all-work construction output figure fell by 1.1% in Q4 2019 to 9.1 billion. Output growth for most sectors was either flat or negative, but new public housing and infrastructure repair and maintenance experienced positive quarter-on-quarter growth. As expected, new order growth was impacted by pre-election uncertainties as London residential new orders fell to 993 million in Q4 2019, a 44% drop compared to the previous quarter and slightly below the 5-year quarterly average of 1.05 billion. London commercial new orders in Q4 2019 also fell 16% compared to the previous quarter to 1.2 billion again, dipping below the historical 5-year quarterly average of 1.4 billion. But despite the quarterly drop in new orders, the value of office projects starting on site were up 47% in Q4 2019 compared to the same period a year ago. Construction material price inflation continued to soften as all key materials in our graph fell in Q4 2019. However, it was rebar that experienced the biggest drop, falling by 7.5% in the 3-month period. Falling commodity prices, lower energy costs and suppressed demand have inhibited material price growth. Though if there is a Boris bounce, as many are anticipating, the improved demand may help to stem the declining material prices. However, this has to be weighed against the recent outbreak of the COVID-19 virus, which will inevitably disrupt global supply chains.
G&T continues to forecast 2020 tender price inflation for London at 1%, rising to 1.5% in 2021 and 2% in both 2022 and 2023, as rates trend closer towards the long-term average. Business confidence and demand for construction projects are expected to grow in 2020, but this won't necessarily translate into substantial new order growth immediately. Positive budget spending plans and greater clarity regarding the type of trade deal that can be struck with the EU could bolster long-term confidence to invest and move projects forward.